Chameleon pre-market show with this man, Dimitri Parkamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon. We're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker dealer. That's what they're there for. There's
Excellent.
a disclaimer. Let me share my screen. And as I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read it back to me. And to give you guys a couple minutes to put those questions in, we'll start out taking a look at the pre-market report, see if we could get insights, what's going on in the pre-market hours, and then we'll move on to the questions. All right, so let's start out with the pre-market report, and these are stocks trading in the pre-market. Up top here, we have this calendar view, which does allow you to go back in time if you wanted to see the pre-market activity on a historical date. Today, so far, we're over here, January 10th. And from a high level, this is what we're seeing so far. We got 453 stocks that are trading higher in the pre-market hours, and we got 282 stocks trading lower. As far as volume goes, we have 85 million shares trading on up volume versus 36 million on down volume. And if we convert that volume to dollar value, we have $2.2 billion worth of stock trading higher versus $1.3 billion worth of trades trading lower. So from a high level, so far, this looks like the trading in a pre-market hours has a bullish lean or bullish sentiment. And let's take a look at it from a couple more perspectives, and then we'll move on to the questions. Okay, so I'm going to come down here, and now we have a list of stock symbols that are trading in the pre-market hours, and we have three lists: our most active stocks, our biggest percentage gainers in the pre-market hours, and biggest percentage decliners. And down here we see we have 43 stocks that made our biggest percentage gainers list, 38 on our biggest percentage decliners. Now, to make this list, we do set certain thresholds, primarily because the stocks in the pre-market hours tend to be very illiquid. You know, you could have a stock that only traded one share, for example. So we have thresholds for liquidity, volume, price change, all these things in there that the stocks have to meet to make this list. And if you look at it, we do have small cap stocks in here. We look closer, there are ETFs, leverage products. There could be a closed-end fund, preferred stock. Any stock that's listed on a major U.S. exchange that meets our thresholds could make this list. And to narrow it down to a smaller group of stocks, we could use the filters above. If you have a watch list, you can filter by your watch list. We're going to use this filter here in ETF. I'm going to click on it. You get a drop-down menu to select from, and you see different ETFs in there. We're going to choose this one, SPY, which is the S&P 500 ETF. And when you select it, the list below gets filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And we had two stocks here that made our biggest percentage gainers list, and 6 on our biggest percentage decliners list. Of course, to make this list, again, it has to meet certain price change and volume and liquidity thresholds. But this shows a little bit of a different indicator than what we've seen. This looks like there's a slight bearish bias in the pre-market trading from this perspective. So we gave it a couple minutes, Will. I think that at this point I'll take questions if you have them.
All right. Nothing's popped up yet, D.
Okay. Let me then default to SPY. And I think one of the questions we got yesterday, actually, I'll come down here on the options volume, and we were doing a webinar yesterday on multi-leg trades. So
Yeah, actually, well, we did get a question.
Okay.
They asked about the IBKR webinar if it took place, and please upload the video, as I was not able to attend. Just for a heads up for everyone, we do not control those videos. What I'll do is I'll put a link. They have all of our videos in a library on the IBKR site. So I'll just put a link to that. You'll have to go and register on the IBKR site to look at the videos. But they are all stored. So you just have to search for yesterday's video. And it's very easy. So I'll just put that in the chat.
Thank you, Will. So yeah, we did a video yesterday, and it involved analyzing the options volume. And what we did was particularly look at the multi-leg options trades. So, we started from here, and this is yesterday's option volume, and it's listed by stock symbol here. And you could use this as a screener, actually. We have each symbol. This option volume right now is defaulted by notional value, the dollar value of all the options trades. We can look at by contract by switching the switch here. So now we see NVIDIA traded 2 million contracts, over 2 million option contracts. We could compare it to its average daily option volume, which is 1 million. So that's 2 times its average daily volume. We have the breakdown in the calls. We have the breakdown in the puts. So the put, you could see 38% of the volume was in the put. And then we have a breakdown by what percentage of the total volume was single leg trades. So when we look at options, they could trade, just a simple call or put. So that's a single leg trade. So if you enter in, just buy or sell a call or buy or sell a put. But that's not the only way to trade options. We also could trade them multi-leg, right? And those are strategies, spreads. That means you have, when you enter in an order through your broker, and I think most brokers now have it, where you enter in a order that has more than one leg, like a call spread, and it has to get executed simultaneously, meaning you don't want just one part of that order executed. You need the entire order executed and whatever price and volume limits that you placed. And then we have the contingent trades here. So this kind of is a breakdown from a top level of what kind of transpired in the options volume in NVIDIA. And, and then when we went and talked about the multi-leg trades, so we just focused on these multi-leg trades. What it does is go in deeper into the analysis to say, okay, well, this is good information because now I kind of have a better breakdown of the volume and how people are using the options in NVIDIA. And by going down deeper, well, what are the strategies? What are the most popular strategies? how many different types of strategies are people using? And based on those strategies, what kind of outlook are they targeting, or what type of exposure in their strategy are traders perhaps targeting? And this gives you more and more information about the trading activity in that particular stock. And I'm going to just go down here and just show you yesterday. You could see this is a breakdown by total options, right? These are all the options that traded, excluding the indexes. Right now we don't have the indexes, but all the other securities, and we see that 43% of all the options volume were already multi-leg. And this has been growing, by the way. This keeps getting larger and larger because people are realizing that using multi-leg trades for strategies can be very beneficial. And it actually, widens the possibility of expressing different viewpoints or different outlooks on the stock. So the question, so one of the questions I think was, well, I think it was like something like, what is the edge of knowing, right, what is trading? Like, why even care, what's going on? If I'm looking at, NVIDIA, or let's say Meta, or, why do I even care to know what other people are doing? Why does it even matter to me what advantage do I have by knowing that? And the answer is that if you're in a business of trading, right, no matter what it is, if you're in the business of trading meta options, or you're in a business of buying and selling, and I give an example, sneakers, or real estate, or you're in a car business, knowing your market and what people are doing and how people, where's the supply and demand, and what prices are people transacting in, and what are the usual patterns of behavior? What are, where do people step in to buy? Where do people step in to sell? Where are large traders? We're knowing that, information provides, the more informed you are, that is your edge. Information is your edge. When you're trading, it's not about a signal. So I think a lot of people think of edge as some kind of a ratio, and when this ratio goes above or below a certain amount, that's your edge, right? Like, here's a, think of it, well, if this number goes above 90, that's your edge, you have to sell it. If it goes below 20, that's your edge, you have to buy it. But trading doesn't work that way. It's not about a ratio or a certain signal that you could just sit there and and wait for it to flash, and then that this is the time to pilot. Here's the low-hanging fruit. Nobody sees it. It's all there for you to grab, and it's just easy that way. That's not how trading works. Your edge is using your knowledge, experience, and skills, right? That's your edge, by knowing what's going on. So I'll give you an example of, if you're a coach, right, you could say, well, what is the edge of studying your opponent's old games and videos and strategies, and knowing which players are good, which players are bad, what is the edge of that, right? Why do you even care? It already happened, right? That this occurred, and why do you even want to know? Well, that knowledge, right? Knowing your opponents, knowing their strength or weakness, what happened, what are they most likely to do, that is your edge when you play, right? Because that's how you are able to strategize around it. But you'll still need the experience and knowledge, right? Not only the information. First, it starts out with how do I even understand the information? That's your first step, because if you don't understand the information, then there's no knowledge or experience that you could apply to. But it begins with understanding understanding the data and information, so you can build up that knowledge and experience. So again, I think that the reason I'm saying, why do we look and try to understand the data and explain it away? Information is your edge, right? And that is what you're trading. You're trading information. You're not when we're looking at trades, right? When we're looking at trades, these are actual people buying and selling securities. You have to keep that in mind. It's not a random number generated by a computer that you're trying to guess, right? We're not trying to guess a random number that a computer is generating, and well, what's the number that's going to come out? It's not like that. It's not like it's not the same thing as, when you go to a roulette table or something like that. These are actual transactions. People are expressing viewpoints. They're buying and selling paper assets and risk. And that's what we're trying to understand. Where are they transacting? So I think that was the question yesterday, kind of left over, that I wanted to cover.
Yeah, and as we have so many tools on the site. One of the trade, I mean, as you're looking at the trades and identifying them, if something's interesting, then you can go put that trade into, a payout diagram, right, and analyze it from there. You can, you can.
Why
there's so many things you can do with it,
right?
Try to understand maybe why, if it's something that piques in it, why is someone potentially doing it? Is there something that I may see interested in? There's so many things you can do with it. It's
exactly, yeah, because I think people think of it as I have to be like quick about something. If I see something, I have to be quick to jump on it, but that's not really how trading is. It's preparation. It's slow. It's an analysis of something. If you went into a investment bank or a hedge fund, and you looked at their research and stuff, it takes a long time to research and understand it and put things together, all the pieces. So it's not,
and it's not always right.
It's not always right. Yeah,
you may not be able to hold it forever.
Yeah, it's not always right, and it's a feedback loop. You're learning from those mistakes, right? Well, what did I what was my hypothesis? What actually happened? Where did I err, and how do I improve going forward? So that is always part of the process. The trading is always part of trading is continuous improvement and adjustments, and proof of theories and so forth. So that is part of trading. I think the mentality is like that trading is like looking at like a little indicator that's flashing, and then you jump on it really quickly or jump out, but that's because a computer could do that, right? If that was it, then we would just have computers.
Well, and that does exist, right? There are companies that have billions and billions of dollars in capital that try to look for instantaneous trades that they've analyzed and feel that there's edge for seconds, hours, days type of thing. I mean, I wouldn't even say days. It's like moments where things get out of line and they feel there's some edge in it.
Like an arbitrage or something.
Yeah.
Right? So which usually if that exists, because there's some friction in the markets that is is too expensive to exploit. So somebody has to have that infrastructure ways to exploit it, right? It's not like something you could exploit easily, through just accessing the market. It's probably some kind of a difficulty or something that if an arbitrage like that exists. Yeah, so that was the point, and that's why when we go and we look at, let's say Coinbase, I have up here, and I think we went through the multi-legs. I explained that if you guys missed it, I'm just kind of doing an overview. If we look at the single, oh wait, sorry, this isn't where I was looking at. Time and sales. If we look at the time and sales, what happens is that here are all the options trades, individual options that traded in Coinbase. And that's difficult to analyze, even for somebody who's really experienced and even understands each trade, and okay, this is what's going on here, this is trying to explain it away. Looking at this is not even possible. It has to get fed through some kind of a tool that is able to analyze it, because there's too many trades. There's like almost 30,000 trades here, right? Just in this Coinbase, 30,000 individual trades. And you could see here, that they have different trade conditions, different times, calls, puts. Some are multi-leg, and like, let's just say we were looking at the multi-leg trades yesterday. If we filtered out the multi-leg trades, so here's a time and sales. I'm going to look at just multi-leg trades. Here's what happens. Okay, now I have all these multi-leg trades, over 7,000 individual ones. And then my problem is, okay, now I see them, but how do I connect them? Because multi-leg trades means that there are trades that are related to each other, right? They're connected. So you could see here, here on the top, these two executions on the SIBO that happen simultaneously are most likely they're connected, right? And just eyeballing it, I see that it's two calls in the same expiration, two different strikes. So I could come to the logical, reasonable conclusion that this was a call spread, right? So somebody perhaps did a call spread, one lot call spread, and here are the prices, so I could figure that out, right? Then I have to go to the next one and the next one. And that becomes very difficult to do if you're doing this manually. I mean, it's almost impossible, right? So then you could start filtering it out by, the volumes and so forth. But so what we did was say, okay, we're going to create a software that basically we input all the data in there, right? And it's going to analyze it, use the logic, and come up with what did things happen, right, through these multi-leg trades, and get us much closer to what we think, is trading in Coinbase, in at least the multi-leg trades, so we're going to split them off between single legs and multi-legs. And this is what we went over. So when we come over here, and by the way, this, I did say I was going to release it yesterday. This tool is still not released because we do have bugs in there that we're working on, and some performance enhancements that we need to make. So you could see here it's still loading. So this, we're hoping to get it out by the end of this week, but this will, we're close to bringing out the first version of it. So here now we went from, all those individual trades. Now we had a software, the computer organized it better for us and said, look, here we found that overall, there's 40,000 option contracts that were involved in multi-leg strategies. All right. There are 38 different strategies that people used options for that we detected. Okay, so 38 different types of strategies. In other words, call spreads, put spreads. So there could have been many different types of call spreads, but 38 different types of strategies yesterday that were detected. And there were 1,340 unique combinations, right? So let's say over here, the top strategy by volume were diagonal call spreads. 16,594 contracts could be attributed to diagonal call spreads, and there were 112 different types of diagonal call spreads, meaning like different combinations of either strikes or different expirations, right? Or both. So when we have selected all, here are the top strategies by volume. So diagonal call spread, this one particular one, the January 19th, 200, 172.5 call spread, that traded for total volume, 14,862. That's the combination of both legs, and traded 71 different times yesterday. So it wasn't one trade or two or three times this traded. It had 71 repeat trades yesterday alone. Okay, so really quickly, when we click on it, what happens is then we get the full details of this particular call spread. These are all the times that it traded. So we have the prices, the markets, and so forth. And here we see all the legs, right? So the January 200 call, January 1917.5 call. This is the current market. The last price it traded at, the VWAP price, and so forth. So we're going to be doing more of this. And what I'll do is leading up to the release in the mornings, we'll start discussing it more and more. So at least once we release it, you guys have an idea how to start using the tool. And then once we release it, we'll start taking questions as well.
Awesome job, Dima. Rob says, awesome new tool.
All right. Well, thanks everyone. And we're right up at 9:30, so I'm going to leave it there. Everyone stay safe out there. Have a good trading day. And we hope to see you guys tomorrow.